In today's episode of Capital Compass, we explore Builder.ai, the heavily funded startup that promised to revolutionize the software development through AI-powered app creation. But despite raising nearly $500 million, questions now swirl around its tech, its financial, and its future. Builder.ai promised to revolutionize app development. Backed by Microsoft and showered with nearly $500 million in funding, it looked unstoppable at a point of time. But within months, it unraveled. This is a cautionary tale about the dangers of scaling fast without scaling right. The key themes that we will be discussing in this particular video is the risk of too much and too soon when we are scaling, the illusion of strategic validation, the lack of discipline and accountability, and the lesson for the founders. The mirage of momentum, Builder.ai's cautionary tale. What happens when a startup raises millions of dollars, partners with tech giants, and captures media spotlight, but cracks under its own weight? In this episode of Capital Compass, we unpack the rise and the unraveling of Builder.ai and what it teaches every founder about growth, hype, and discipline. Let's start with the hype cycle. Builder.ai was founded in 2016 with a bold promise to democratize software development using AI. In an era where the no-code and AI-powered were the magic words, they rode the wave with perfection, raising nearly $450 million in funding, including a $250 million Series D led by QIA and Insight Partners in 2023. Builder.ai struck a high-profile partnership with Microsoft, promoting integration with Azure. They also claimed revenue tripled year-on-year and positioned themselves as a Shopify of custom app building. On the surface, Builder.ai looked like a unicorn in the making. But then, everything started to unravel. So what were the cracks beneath the surface? Despite the glossy exterior, insiders and the reports soon started raising red flags. First and foremost, there were changing revenue claims. Public interviews and pitch decks included different figures. Then there were unpaid vendors and partners. Multiple reports surfaced that Builder.ai was not paying service vendors on time. And then there was also the fact that the founder had to step down as the CEO in 2024. One of the biggest issues, overpromising and under-delivering. While Builder.ai sold the dream of fast, cheap app development, customer reviews began highlighting poor execution, delays, and bloated pricing. So what are the lessons that the founders can learn from Builder.ai? First and foremost, you have to understand as to what went wrong. This was not a product issue. This was a strategy and governance issue. And there are key lessons that can be learned. First and foremost, the momentum isn't a substitute for discipline. Fundraising can create the illusion of success, but it doesn't fix the operational weaknesses. Secondly, revenue projections must be credible. Inflated or inconsistent figures hurt trust with both the customers and the investors. Thirdly, big partnerships can mislead. Microsoft backing looked like validation, but it didn't solve the product market fit or the execution woes. And lastly, the cash burn without unit economics is dangerous. Builder.ai reportedly burned through capital rapidly with high customer acquisition cost and no clear paths to profitability. So what's our take on this entire issue? As a founder, it's tempting to chase headlines, raise fast and scale before you're ready. But the best founders know slow is smooth and smooth is fast. Your best signal to investors isn't the biggest round or the flashiest logo. It's happy customers, a clear strategy, and solid numbers. This is the Capital Compass series and new episodes drop in every few days. If you're raising, do share your pitch deck at pallavisegal.com/submit pitch deck for potential support, review, and feedback. That's all that we wanted to share with you in this particular episode. Hope you've enjoyed this episode. Do stay tuned in for more. Thank you.